Hello, my name is Elwin Ng and welcome to Market Apprentice. Today, we're going to be talking about one of my favorite subjects. That's going to be price action. Hopefully, in today's session, I'll be able to give you some nice introduction to candlestick patterns. Alright, hope you enjoy the session. Before we begin, the objective of today's session is really to help you understand the formation of bars and candlesticks. Basically, to understand what it takes to form those bars and charts that you will be trading in due course. It is to help you to start learning and identifying those simple candlesticks. And it is a starting point to building a good foundation to price action. Again, price action being the movement of the market prices in technical analysis. Before we begin, and if you haven't already done so, please feel free to visit my website at marketapprentice.com. If you're going to click on the Beginners tab, and inside you're going to be able to find what is price action. Within that section, or that page, you're going to be able to find a brief introduction of what price action is all about, a quick introduction to how to read price action, high test bars, high highs and high lows. Once you've done that, I then invite you to come join us on this section on price action. Right. To begin with, in front of you is what we have, a OHLC chart, open, high, low, close chart. The example in front is a Euro New Zealand dollar on a daily. And this is what you would typically see on a trading chart, where you have the bars inside the chart which represent a certain time frame. So in this example, it's a daily chart. You have the dates at the bottom, and you have the prices of the chart on the right. Now, the chart previously was made out of multiple bars that looks somewhat similar to one in front of you. An OHLC bar is made up of, as you would imagine, an open value, a high value, a low value, and a close value. Each bar represents a specific time frame in the market. In this example, this is a daily chart, so every bar in front of you represents one day. The bar in front of you is what we call a bull bar, an up bar, or a buyer bar. The bar on the right is what we call a bear bar, a down bar, or traditionally a seller's bar. Just to illustrate a little bit further, in front of you is a cursor data which shows us what the open, high, low, close values are for gold. In case you're wondering, XAU is the code for gold. Now, to start off, when you look at the chart, the first thing you need to know is what time frame are you looking at. Understand the time frame. In this example, what we have is a H4. A H4 also represents a 4-hour chart. To give you a good idea of what open, high, low, and close means, let's say the bar in front of you represents a 4-hour chart, or 4-hour bar. And the bar at 6 a.m. opens. So the bar here opens at 6 a.m. And when the bar opens, the price at opening is 1247, as stated here. Price will go through a cycle of high and low, at which point it will close at 9:59. And price will close at 1255 and 69 cents per ounce, as stated here. Well, we don't really know what happens in between the open and close. We know that the highest value where price reached between 6 and 10 a.m. was at 1258.24 cents per ounce. And during the same session, price went as low as 1244.20 cents per ounce, both of which can be found here. Next, in front of you is a candlestick chart. Similar to the OHLC chart, this chart here represents a weekly time frame, which means every bar here represents 1 week period. If you were to narrow down to each bar, you probably get something similar to what you have in front of you. Just to clarify the terminology, firstly, the candlestick is actually made up of the open, high, low, close values as well, but is represented in a different visual representation. In a candlestick, what you have in front of you is the body, and the body is defined between the open and the close. The upper stick or upper tail is what you have between the high and the body, while the lower stick is what you have between the body and the low. In candlestick analysis, the body of the candle is a key component of the analysis. Similar to OHLC bar, the candlestick on the left is a bull candle, and the one on the right is a bear candle. You can also call it the buyer and the seller candle, or the up and down candle. Right, that pretty much determines how you define or how you form a candlestick. Now let's start talking about price action. And the following candlesticks will be the basic candlesticks that you're going to find on every single chart. Hopefully you start paying attention to those candlestick patterns because you will be using them on a frequent basis. In fact, price action or candlestick is one of the most important lessons that I'll be teaching you from here onwards. In front of you is a high test bar, or sometimes also called the pin bar. The pin bar is where you have the body at the bottom half of the candle. More importantly, it is about 1/3 of the entire bar. It is also important to note that the open is near the close of the bar. Regardless of the color, when the bar has an open or close that is 1/3 or less of the lower bar, it is called a high test bar. Just to let you know, a high test bar is also a reversal bar. More often than not, when you see a high test bar with confluence to a support and resistance level, you will very likely get a reversal pattern. Next, you have a low test pin bar. Similar to a high test bar, the body of the bar needs to be 1/3 or higher of the body. Again, the open is near the close. Regardless of the color, as long as the open and close is 1/3 or less of the upper half of the bar, it is considered a low test bar. A low test bar is also another reversal bar. Next, we have a Doji Bar. A Doji Bar is when you see a candlestick with a very small body. The open and close is pretty much next to each other. You more or less find very short tail as well. So the high and low is very close to the body. Regardless of the color, a Doji Bar represents indecision. It just means that the bulls and bears are in equilibrium. The bull and bears in this context represents the buyers and the sellers. and both the buyers and the sellers are of equal strength. A high wave candle bar. Similar to the Doji Bar, the high wave candle has a small body as well. Again, the open is near the close. However, slightly different to the Doji Bar, a high wave candle has a long tail. A high wave candle bar represents extreme indecision. A trend bar. The bar on the left is what we call a bull trend bar, and the one on the right is a bear trend bar. Similarly, it's also called a buyer trend bar or a seller trend bar. Trend bars are very important candlesticks. To identify trend bars, you find close that is near the high, and the opens that are near the low. The opposite is true. For bear bar, you have the open that is close to the high, and the close that is near the low. Trend bars are long candlesticks. You usually see them long and much longer than the average candlestick. If a trend bar is longer than the average size of its preceding bar, it is a good indication of momentum. The opposite is also true. If the trend bar is at the end of a cycle, this can be an indication of exhaustion. In other words, price is about to stop to reverse. The inside or harami bar. The definition of an inside bar is when a bar has a lower high and a higher low compared to its previous bar. In other words, the inside bar is always covered by its preceding bar. Regardless of the color and the direction, an inside bar is a temporary indecision or consolidation. Again, the buyers and sellers are in equilibrium. Engulfing bar. The bullish and the bearish engulfing bar are one of my favorite bars. To identify an engulfing bar, in a bullish engulfing, the body must cover or close above its preceding bar. Because in the forex market, the close is almost immediately at the open. The close of the next bar must be way above this bar here, and the higher the better. Likewise, in the bearish engulfing bar, this bar here needs to close below its preceding bar. If you see the more bars the engulfing bar overlaps, it means there's a much stronger momentum. By that I mean this red bar here covers many small little bars before it. The more bars it covers, the stronger the momentum in the new direction. The engulfing bar is another reversal pattern. A twin track. A bullish twin track is when price starts off higher, comes down lower before it goes back up again. This is a strong reversal pattern. Likewise, in a bearish twin track, when you see this, especially when in confluence with support and resistance, this is a good indication that the sellers are back. The bars have nearly the same height and nearly the same low. Twin tracks represents clear change in leadership. For example, here the sellers were taking control, but by the next session, the buyers have taken control. In this example, the buyers were initially taking control, but at the end of this twin track, the sellers were taking control. Next, we have in front of you a morning or evening star. This starts to get interesting because now we're starting to look at 3 candlesticks or a group of candlesticks. If you were to look closely, the morning star started off with a downtrend bar. And then you have here an inside bar. On the third bar, price showed a complete reversal in direction. It started moving upwards. Similar to a twin track or the lotus bar, this is a good indication of reversal. Likewise, in the evening star, you started off where the buyers were taking control. Then there was an inside bar, which represented indecision. And when the third session came in, the sellers took control and took price all the way down. As you can see, after a strong trend bar, there was indecision. The market then decided to head in a complete opposite direction on the third bar. The forced break or failed breakout. Now, to illustrate this candlestick pattern, first look back at an inside bar. These 2 bars represent an inside bar pattern. However, on the third session, price initially broke above the inside bar. Unfortunately, within the same session, price failed to stay above that and it came down. In the end, this formed a high test bar. Due to the nature of price action, where price went above the dotted line or went above the inside bar, but failed to remain up there, it shows that the sellers completely took control. Here we have a similar pattern but in the opposite direction. Price broke above or below the inside bar but failed to close above or below it in the same session. This is what we call a false break or a failed breakout, where price tried to break out but failed. Learning tips. Now, as you can see, we've started to dwell into how price reacted in different situations. You would then come to realize that price action is the most important indicators. So please spend time understanding price action, and if you need to, revisit this video as often as you can. Next, all open, close, high and low values are equally important. Just as a tip, always remember the bar or the candlestick needs to close, i.e. the session needs to end before the candlestick is completed. For example, you may sometimes see a bar that looks like a trend bar in the middle of a session. However, the session might end as a high test bar instead. Price action represents investor behavior. Always try to understand what price is doing. So if you want to win in trading, you always follow the winner. Now, for some homework. Make sure that you do this homework as soon as possible. If you really want to become a trader, then I hope you can start after this video. Firstly, pick one currency pair from your trading platform and find one example for each of the following price action. Find one high test bar, low test bar, trend bar, inside bar, engulfing bar, twin tracks, morning and evening star, and find a false breakout. Once you're done, discuss the significance of each price action and how they are useful when referenced to price cycle. If you want to, Look at how they react to support and resistance at various levels. Try to understand what price does when you reach those support and resistance. Anyway, that's it for today. Thank you very much, and I hope that you've enjoyed the session. Hope to see you soon. Bye.